Bismillahirrahmanirrahim. We will continue with our course that is about investment and portfolio management. The course code is MGT531 and we will do the 14th lecture today. This is the lecture number 14 and we will continue with this. The study that we will do in order to undertake the concepts is by the Christina. As usual study we have been doing in our previous classes, and it was conducted in 2010 about the investment analysis and the portfolio management. First of all, we will discuss the summary points of the last lecture. That what we did in the last lecture, we discussed the interpretation of the coefficient beta in the last lecture. We also did the APT theory, that is the arbitrage pricing theory, and we also discussed in detail the assumptions of the APT theory, and we discussed the positive points and the features of these assumptions. We also did the market efficiency. We did the opportunity set and the efficiency of the sets that we are having as a portfolio choices and portfolio investment. Then we also did the comparison between the APT theory and capital asset pricing model, that how we can compare these models, what are the particulars of the capital asset pricing model and what are the particulars of the arbitrage pricing theory, and how we can compare these two models. Then we also discussed the macroeconomic variables and the impact of these variables on the returns of any specific security that we have decided to purchase and keep in our portfolio holding. In other words, we can say that we discussed the relationship between different macroeconomic variables and the returns of any specific security that we have kept in our portfolio. That is how these different macroeconomic variables and the variations in these variables are likely to have changes and are likely to bring fluctuations in the returns of any specific security that we have decided to purchase or we have already kept in our portfolio holding and are the part of our portfolio set. First of all, in this lecture we will discuss the main contents of today's lecture, that what we are going to discuss and what we are going to do in this lecture. We will do the assumptions of the APT theory, that is arbitrage pricing theory, that what are the what are the different points and the for example the comments on these assumptions, and how we can say it is impractical, whether the theory is practical or impractical. We have certain suggestions and certain arguments in this respect. Then we have asset prices, we have minor factors, market efficiency, we have form of efficiency, weak form of efficiency, and semi-strong form of efficiency, and the strong form of efficiency. We can say that as we discussed the concept of market efficiency in the last class, we can say what are different types of this efficiency and how these types are determining different type of situation as far as the efficiency of the capital market is concerned, and as far as the efficiency of different securities or different items that we are deciding to purchase and deciding to keep in our model, they are concerned. We will start with the APT theory that we discussed in the last lecture also, and we will continue the discussion with this theory. And the first point, as far as the comments on the theory are concerned, we can say that the large number of factors in the APT model, they would be impractical. We discussed the different basic features of the theory in the last lecture, and according to that discussion, the important comment on this theory is that a number of factors they appear impractical. That is, we can say that the number of the factors which we have discussed as a feature of and as important points of the APT theory, they are not relevant to the reality, and they cannot be considered as practical points. Because what is the reason? Because the models seldom are 100% accurate. One important point that we can say that if we have the APT theory, and we discussed it in the last class, and the features and the assumptions of this, but we have comment on this, we argue that it is impractical, and the one reason is why it is impractical, because a number of the models, and the models in reality they are very rarely 100% accurate. if we have formulated any model about any field, about any variable of the field and the variable of the economy, we have the point that they not fulfill the requirement, and they are not relevant to the practical life 100% extent. Therefore, to some extent, when we formulate the model, to some extent they may be right, and to some extent they may not be right. They may not belong and relevant to the real situation prevailing in the economy. Therefore, this is not a point about which we should be worried that why the different points of the APT theory are impractical. If there are some points which are not relevant to the real situation and practical life, it does not matter. Definitely, every point has certain weaknesses and has certain points which can be commented by different readers and by different students and by different researchers according to the knowledge and according to the thinking and the mindset of every individual. And the asset prices are function of both the macroeconomic factors and noise. So as far as the prices of the assets are concerned, and the assets which we are deciding to keep in our portfolio, and the assets which we have decided and we have kept as a part of our portfolio, they are affected by both by the macroeconomic variables and the noise. So what we have discussed in the last class, that they are affected by the majority of and major and important macroeconomic variables which are representing the economy, which are representing the trends in the economic situation of the country. And we said these economic factors are basically and can be defined as the inflation rate, which is macroeconomic variable, affect the whole economy, and the GDP growth rate. We said that the gross domestic product, which is another important variable of the economy, it can affect the prices of the assets that we have kept in our portfolio, or we have decided to keep in our portfolio. And similarly, we can say exchange rate is another important variable. We discussed that rate of interest is another important variable which is likely to affect the rate of return of any particular asset, the rate of return of any particular security or any particular instrument that we have decided to keep in our portfolio. We are deciding to choose them in our portfolio. Then we can say that noise is another factor. Besides these major macroeconomic factors which are likely to affect the behavior of the return of these assets and securities in the financial market, we have the noise, another type of factor which can be known as noise. So we have to first define what is noise, and how we can define this, and how it is going to impact the return of the assets, return of the securities which are being traded and which are being favored and purchased and sold by the individual investor. This noise is basically coming from and is the result of the minor factors. And what are the minor factors? So we can say noise is basically the disruption or the variation or the change which occurs in the return of assets and securities and instruments in the asset market, in the financial market, and it comes from the minor factors. And what are minor factors? They basically are the factors which have little impact, which have little and minor impact on the returns of the assets, on the returns of the securities, on the returns of the instrument that we are deciding to choose as a part of our portfolio, or we have decided and we have already kept in our portfolio set, or in the boundaries of our portfolio. So we can say that we have two types of important variables which are prevailing in the economy, which are relevant to the economy, and they are affecting the behavior of returns of different instruments and different tools and different items in our portfolio working in the financial market. And one type are the macroeconomic major factors. For example, interest rate, for example, growth rate in the prices, for example, overall productivity of the country, for example, exchange rate, for example, supply of money, for example, demand for money, and for example, rate of interest. But we have minor factors also. We do not affect the economy on the whole, but they are likely to have certain impact. For example, if we say that fluctuation in the prices of the commodities which are not very much used by the people of any country, or we can say that quantity of output demanded, quantity of output supplied by the producers in a country, which are not very much likely and which are not very much prevalent in the economy. So these are the minor factors which are not very known. Definitely, if they are not very known, they are not being traded in the market and in the economy, they are not going to have much and greater impact on the purchase and sale and on the returns of the financial market assets. So this is the important point, how the returns and the trends and the behavior of securities and assets prevailing in the market, financial market, they are affected. Then we have the relationship between CAP and APT. As we know that CAP means that capital asset pricing model, and then we have another theory which is the arbitrage pricing theory. They are not really essentially different, and in the last class we discussed that they have some different points, and to some extent they are different, and they are basically identifying different situations prevailing in the market, but reality they are not very much different, because they are developed for determining an expected rate of return. So what is the reason that they are relevant to each other, they are associated with each other, they are likely to identify similar type of situation prevailing in the economy? The reason is because they identify the expected rate of return of the assets. So we can say that the expected rate of return of the assets, expected rate of return of the instruments, and that of the securities being purchased and sold by the individuals, being preferred as a trade item of the individuals, and this is the common factor. Therefore we can say that they are associated with each other, they are relevant to each other and linked with each other. So then we have the market portfolio. Market portfolio tells us that CAPM. What is market portfolio? And we know that market portfolio basically indicate the portfolio in the overall market that the investors are likely to hold, or we can say that what is the common type of assets, common type of instruments which are being traded in the market and is known as market portfolio. Or if we look at the overall portfolio of the market, definitely we will analyze the overall rate of returns of the assets in the market, or the assets present in the market. So this is the market portfolio. So we can say, and the CAP model we can say is likely to elaborate this market portfolio, and CAP model is likely to highlight and likely to identify the characteristics of market portfolio. What is market portfolio, why it is important, and what are its impact as far as the returns of any specific asset is concerned, or the returns of any specific instrument and any specific item that we as an investor are likely to keep in our portfolio and likely to make a part of our portfolio are concerned. So a number of macroeconomic factors, APT, and however if we look at the behavior of the arbitrage pricing theory, if we look at the trends of arbitrage pricing theory, we know that number of macroeconomic variables, they are linked with APT. And APT is the theory which identify, which highlight the relationship, which highlight the association of different macroeconomic variables with the returns of any particular asset, with the returns of any particular item that we have kept, that we have purchased as a part of our portfolio, or we are deciding to keep them as a part of our portfolio. So what is this? This is basically the similarity that both type of, we can say both type of variable and theories, both type of models, they are indicating expected rate of returns of the assets that we are trading in the market, and and both are associated, both are linked, and both are being impacted by the market portfolio and by the macroeconomic variables. So we can say this is the common point to be discussed as far as these two models are concerned and these two theories are concerned. And both models predict how the return on asset will result from factor sensitivities, and this is of great importance to the investor. So we can say the relationship between the returns of the asset an investor is going to keep in the portfolio and return of the going to keep in the portfolio is affected by the returns of the market portfolio, and how these returns are affected by the macroeconomic variables and changes and sensitivities and fluctuations in macroeconomic variable, how they are going to affect the expected rate of return of the asset that investor will held or investor will purchase. So this is the important point. So we can say that these models will predict this common point, and which is relevant with the sensitivity of returns of market portfolio and sensitivity of changes in the macroeconomic factors, and they are linked with the returns of and the expected rate of return of the assets and securities and items in the portfolio of any particular investor. So we can say this is basically the important point and significant point, and the point of the great importance to the investor. He should have the proper knowledge of these type of fluctuations and these type of relationships and association of different variables and factors with the expected returns of the particular asset and particular portfolio item or particular security that he has decided to keep in his own portfolio set and portfolio boundaries. So then we have the market efficiency theory. That what is market efficiency theory? How it is likely to affect the situation prevailing in the financial market. The concept of market efficiency was proposed by Eugene Fama in 1965. So we can say that this is an old theory because it was discussed so many years back, and still it is so much important for us, and it is so much important for the financial market to work in the right direction and to behave in a good manners in order to increase the overall efficiency and in order to increase the returns of the investors and the income of the investors. And the Eugene Fama article about the random walk in the stock prices was published in Financial Analyst Journal in 1965. So this is the particularity and this is the significance of this article that it was published in a reputable international journal, and it was it was many years back. And the Fama had a good idea and analyzed the situation as far as the returns in the market, financial market are concerned. So we can say that this article was very much important and highlighted the random walk of the assets market prices, and how the stock prices they follow random walk rather than systematic walk, and rather than systematic walk and stochastic walk. They can take any walk and they can walk randomly, they can change randomly, they can fluctuate in positive direction, in upward direction or downward direction randomly at a random level. Market efficiency means that price which investor is paying for financial assets. So what are the financial assets? They can be defined as stock, they can be defined as bond and other sensitivity and other security points and other items and other instruments which are present and which can be present in the portfolio of the individual investor. And the price or the value which investor is paying for the financial asset. If we can say that if he is the buyer of the seller, what he is going to pay for the purchase of the financial asset, and if he is seller of financial asset, what he is going to get and what he is going to receive for that particular financial asset. So we can say that this is the important point, and this is the important situation which can be discussed as far as the market efficiency is concerned. And this price which the seller is likely to get for the sale of the financial assets, and the buyer is likely to pay for the sale of the purchase of the financial asset, fully reflects the fair or true information about the intrinsic value of the specific asset. So we can say the market efficiency basically indicates that price for any particular financial asset, it fully reflects it in realistic sense. It reflects the true information or right information of the intrinsic worth of the specific asset, that it tells it what is the intrinsic worth ऑफ दी पर्टिकुलर एसेट के किसी भी पर्टिकुलर जो एसेट है या पर्टिकुलर सिक्योरिटी है या आइटम है या इंस्ट्रूमेंट है, तो उसकी वर्थ क्या है, उसकी इन एक्चुअल वैल्यू क्या है एज फार एज द मार्केट इज कंसर्न. So for this basically market efficiency works under the full information about the prices of the and about the worth of the financial assets. So what the prices are basically indicating and reflect the intrinsic worth and intrinsic value of the financial assets and financial securities. Therefore we can say that if their worth is fully known and in the real sense it is known to the individual investor, so we can say where we can take the better decisions as far as the purchases of the items in our portfolio are concerned, and as far as the sale of the items, different items, sale of the different securities which we have in our portfolio, they are concerned. Then we continue with the discussion. We can say what is the price of the stock. Market efficiency indicates the efficient prices that the seller is likely to follow at the time of the sale of the asset, and buyer is likely to follow at the time of buying of the asset. So we can say that this price, market price, is efficient price, and it fully provides the information to the traders, fully provided the complete information to the buyers and sellers of the market, and it fairly describes the intrinsic value of the company. And if we look at the company, for example, if we have the asset and we discuss about the worth of the asset, intrinsic value of the asset, so we have the buyer on one hand, we have seller on the other hand. So basically market efficiency is, or we can say that efficient market basically provide complete information about the intrinsic worth of the financial asset, about the intrinsic value of the financial asset to the buyer of the portfolio set, and to the buyer of the items in his portfolio. And similarly at the same time we can say it fully reflect the value of the company and what is the worth of the company which is issuing this particular security. In this way we can say we can come to know, with the help of these prices, we can come to know the credibility and significance of the company and the wealth of the assets of the company which is issuing and selling this particular security. The key term in the concept of market efficiency is information. So therefore we can say what is the important concept on the basis of which market efficiency is working, on the basis of which we can say market is efficient or it is working efficiently. The function of the market is efficient on the basis of the information. We can say if we are able to have the full information about the situation prevailing in the financial market, and if we have the complete information, so we can undertake the proper decisions, we can undertake the perfect decision as far as the purchase of the assets is concerned and as far as the sale of the assets. And as far as the sale of the assets is concerned, so information is important. The knowledge of the current situation is important. And if we do not have the proper knowledge as an investor, if we do not have the complete and proper information about the intrinsic worth of the assets and about the level of the prices which are describing the worth of the asset, and also the trend or the direction in which these prices are fluctuating and moving, and if we do not have the information, definitely we will not be able to undertake proper decisions, we will not be able to undertake the decisions which are optimizing our behavior and optimizing our decision. Rather, if we have complete and full information about the situation, so definitely we will be able to provide the complete information to the sellers and the buyers as far as the behavior of the assets is concerned, so we can take better decisions about the portfolio holdings and set up portfolio holdings. So information available for investors trading in the market, that is investors, whether buyer or seller, what they are trading in the market, they should have complete information. Then it is stated that the market price of the stock reflect what the market price of the stock reflect. जिसको हमने efficient market price कहा है, ये जिसको हमने कहा है, because of this efficient market prices we have and we are confronted with the efficient financial market. So what this market price reflect? This reflects that all known information, including past information, that the individual, they should be proper source of the provision of the complete information to the buyer of the asset, to the seller of the asset, as far as the purchase and sale of the assets is concerned. So, this information includes the past information, that is the information that was previously provided, or we can say it about the past behavior of the assets, about the past behavior of the securities. The complete information should be provided, and this is known as the full information. This can be known as fair information, and the information is complete about the behavior of financial market. It is full about the behavior of financial market if we have the information about the past behavior of the returns of the financial assets. And what we mean by the past information, what is the past and how we can define the past. So as far as the financial market is concerned, we can say past is basically the last year, or it can be the last quarter, and it can be the month's earning, or the behavior of the assets and rate of returns of the assets which is changing or fluctuating in the last year and last quarter or the last month is known as past information. कि past information जो है वो पिछला एक साल की information भी हो सकती है, पिछले कुछ महीनों की information भी हो सकती है, पिछले एक quarter की information भी हो सकती है. Depends upon the maturity of the assets and life of the assets which are being held and which are being purchased for that particular time period and for the particular life of the portfolio investors. Now we will move to since we are discussing the information, which is the importance of information for making the purchases and sale in the financial assets market, and we discuss what do we mean by the full information. So the full information basically means that we should have the information about the past time period. Okay, the market efficiency basically reflect and is based on full information available to the buyer of the assets and the seller of the assets and security in particular market. And as we discussed earlier, that past information is important. Besides past information and the information about the behavior of the assets in the past time period and what the asset behavior has been observed by the investor in the previous time period, it may be 1 year, it may be 1 quarter, it may be few months of the year. The current information, the information which is prevailing in the market at present time is also important. What type of events are going to occur and going to appear at the present time period in the economy, in the society, and in the financial market and in the other sectors of the economy. So we can say that besides the past information, the current information is also very important to be discussed and to have in order to provide the proper guideline to the investors to make the purchases of the assets and to make the sale of the assets. So this is another important point. And for example, we can say that if the shareholders meeting is going to be held in near future, or is going to be held in 2 or 3 days of this week, or is going to held in this week, or by the end of this week, or in the next week, so we should have the information that what were the discussions in this portfolio in this meeting of the shareholders, and what was important discussion, and what are the outcomes, and what are the policy points as a result of this meeting, which can affect the returns, which can affect the purchases and sale of the assets and securities in the financial market. Second important point that tell us that why the information is important, or which is the full information, why it is needed. Information that can reasonably be inferred. For example, if many investors believe that interest rate will increase in the nearest future, or the government deficit increases, so So we can say on one hand we should have the information about the past behavior of the assets, and we should have the information about the current situation, what is as far as the economic and financial changes are concerned at the present time period. We should be aware of that, and the investor should be aware of that they should have the knowledge of this type of information. And then we can say that also we should infer the situation. As an investor we should infer, we should predict, and we should guess the situation, what is going to be done in the near future or in next few days, what is going to be done, and how these different factors are likely to affect the financial market in next in the future few days or in the near future. For example, we can say that some investors, they guess and they have the idea, they predict that the interest rate is going to increase in the near future. For example, they can guess that the state bank is likely to change the rate of interest in the near future. In other words, we can say that the state bank is likely to increase the rate of interest in the near future. On the other hand, we can say that the government deficit increases, or we can say that another source of information can be that we can say because the budget is going to be offered by the government, and government is going to present the budget for the next fiscal year, and we find that the budget will be presented in few days, and the government has calculated the difference between the revenues of the government and the expenditures of the government, and the government agents, they come to know that as compared to the previous fiscal year, now the deficit is high and is going to be increased. That is, the budget deficit is going to increase. So prices will reflect this belief before the actual event occurs. So we can say, for example, another is जो है जब इस तरह की सिचुएशन आती है, if we have basically three types of major segments of the information. एक तो past period की information है कि past में trend जो है वो क्या रहा है, और एक जो है वो current time period की information है, और एक जो है हमारे पास वो are the guess, what is the guess, what type of the changes are going to be occur in the finance, in the economy and in the society in the next few days. For example, हमने जैसे ये गेस लगाए कि he can predict कि इंटरेस्ट रेट इज गोइंग टू इंक्रीज, इंटरेस्ट रेट जो है वो बढ़ जाएगा और इज गोइंग टू इंक्रीज, और हमने कहा कि बजट डेफिसिट जो है वो गवर्नमेंट इज लाइकली टू फेस मोर बजट डेफिसिट, और ये बढ़ रहा है, और इसका मतलब ये है कि गवर्नमेंट के जो रेवेन्यूज़ हैं उनके दरमियान में और जो एक्सपेंडिचर्स हैं उनके दरमियान में डेफिसिट जो है वो बढ़ रहा है, और वी कैन इन अदर वर्ड से एक्सपेंडिचर्स आर ग्रेटर देन द रेवेन्यूज ऑफ द गवर्नमेंट. तो दिस इज द कॉन्सेप्ट ऑफ बजट डेफिसिट. तो जब ये होता है, जब इस तरह की रूमर्स आती हैं या प्रेडिक्शंस मार्केट में आती हैं, तो दिस प्रेडिक्शंस इफेक्ट द मार्केट प्राइसेस और इफेक्ट द सिक्योरिटी प्राइसेस. So we can say that this will affect the portfolio purchases of the investor. So it is quite definitely the investor, they will undertake their portfolio decisions in the light of these type of predictions, in the light of these types of possible changes which are going to occur in the market. So last point on this slide indicate that prices will reflect this change. They will reflect this change, that we can say that before before this, that the government has presented the budget and the budget deficit come up and arises, and before that the interest rate has gone up. अभी interest rate नहीं बढ़ा, लेकिन जो market prices हैं या of the asset they changes. Market prices of securities they start increasing, वो बढ़ना शुरू हो जाती हैं, या जो situation है उनको जिस टाइप से भी, जिस लेवल पे भी या जिस डायरेक्शन में भी उनको इफेक्ट करती है, और मे डिक्रीज और मे इंक्रीज. एंड पास्ट डेफिनेटली वी नो दैट पास्ट एंड फ्यूचर बोथ इफेक्ट द रिटर्न्स एंड प्राइसेस ऑफ द एसेट्स ऑफ फाइनेंशियल मार्केट. फॉर एग्जांपल, व्हाट इज द पास्ट? लेट्स से वी से दैट वी आर टॉकिंग अबाउट 2005 सिचुएशन, 2010 सिचुएशन एंड 2011, and now we are at 2014. तो 2014 में हम आ गए. वी आर टॉकिंग अबाउट एनी पर्टिकुलर एसेट ए, और इसका सिचुएशन ये है यूं ये आ रहा है, यूं आ रहा है, और वी कैन से अप्स एंड डाउन्स आर ऑब्जर्व्ड इन द प्राइसेस ऑफ दिस पर्टिकुलर एसेट है। इस एसेट की प्राइस में अप्स एंड डाउन कॉन्टिन्यूसली जो है वो ऑब्जर्व हो रहे हैं अप टिल पॉइंट जो है वो 14, और 14 में हम ये कह सकते हैं कि देयर आर रिलैक्स्ड आर रिलेटिवली स्मॉल जो है फॉल्स अप्स एंड डाउन्स, स्मॉल अप्स एंड डाउन्स इन 14, क्योंकि यहाँ पे 14 में आके जो चेंजेस इन प्राइसेस है वो इतनी ज़्यादा डीप नहीं है कि प्राइस जो है वो एकदम से बढ़ गई है। फॉर एग्जांपल वो यहाँ आ गई है, पहले वो यहाँ पे थी, फिर वो अगेन फॉल करके यहाँ नीचे की तरफ चली गई है, फिर वो इंक्रीज करके ऊपर की तरफ चली गई है। तो ये जो सिचुएशन होती है वी कैन असेस दी फ्रॉम द इंफॉर्मेशन अवेलेबल इन द पास्ट, और ये डेफिनेटली डाटा से हमारे पास आती है। एंड वी कंटिन्यू विद द डिस्कशन इन दिस डायग्राम कि ये जो हमारे पास फ्लक्चुएशंस आई हैं, हाउ वी कैन कम टू नो अबाउट दिस इंफॉर्मेशन, वी कम टू नो अबाउट दिस इंफॉर्मेशन फ्रॉम द डाटा व्हेन वी ड्रॉ द एंड प्लॉट द रिलेशनशिप बिटवीन द टाइम पीरियड एंड वर्टिकल एसेट्स आर द प्राइस, वर्टिकल एक्सिस इंडिकेट द प्राइस ऑफ द सिक्योरिटी और प्राइस ऑफ द एसेट, हॉरिजॉन्टल एक्सिस जो है इंडिकेट द टाइम पीरियड, और दिस टेल्स अस व्हाट टाइप ऑफ फ्लक्चुएशंस आर इंडिकेटिंग। आफ्टर 2011 we can observe there are relatively small fluctuations, और जो increase sharp increase जो है वो नहीं होती prices में, और ना ही sharp जो है वो fall आ रही है, और there are no deep and sharp ups and downs in the prices of the asset observed. तो we can say what will happen in the 2014, तो we can say कि 2014 में भी इसी तरह का जो situation है वो अकर करती है, इसी तरह का behavior जो है वो asset का वो रहता है in 2014 कि उसमें इतनी चेंजेस जो है वो नहीं आती। दिस इज तो ये हमें बताता है करंट टाइम पीरियड एंड फ्यूचर टाइम पीरियड एंड पास्ट। फॉर एग्जांपल अप टिल 2010 हम कहते हैं 11 किस तरह की चेंजेस आई हैं, फिर रिलेटिवली स्मॉल फ्लक्चुएशंस अप टू 2014। तो व्हाट वी गेस अबाउट द 15 definitely in the next few months, for the next quarter, for the next year, we guess and we predict that prices will of the asset A will move and will fluctuate in a similar manners and will fluctuate in a similar pattern. So in this way we can say why the information is important. This tells us why the information is important. What is the importance of the efficient information about the prices of the assets which are being traded in the market. This is the reason that because we have the information which help us, which guide us as an investor, as a portfolio holder to purchase them and to make them as a part of our portfolio. Continuing with the same discussion, and this make the market efficient. Definitely at the end we will have the efficient market when we are going to have efficient decisions at the efficient market at price, कि जब prices हमारी इस level पे हों कि we should purchase and we should decide to purchase items, हम उनको purchase कर लें, और prices जब इस level पे हों कि we should decide to sell, तो हम उनको sell कर दें। तो market efficiency, capital market is efficient. If the prices of securities which are traded in the market react to the changes of institution. So prices of the market is that if prices of the securities which are traded in the market they react to the changes of the situation. Definitely कि जब market में changes आती हैं, let's say हम कहते हैं कि there is change in the rate of interest. Rate of interest जो होता है as we discussed in the yesterday class and in the previous lecture के rate of interest, whether it is nominal rate of interest or it is real rate of interest, जब changes होते it fluctuates, it is going to affect the two investors in two ways. First is because as a borrower, investor is affected as a borrower, and second investor is affected as a investor. एक तो वो है जो है वो एज ए बोरोर बिकॉज ही बोरोज इफ रेट ऑफ इंटरेस्ट इंक्रीजेज तो बोरिंग जो होती है वो कम हो जाती है बिकॉज इट इज एक्सपेंसिव। अगर ये रेट ऑफ इंटरेस्ट कम होता है तो बोरिंग जो होती है बढ़ जाती है बिकॉज बोरिंग इज नाउ चीपर देन द प्रीवियस टाइम। सेकेंड रीजन जो है एज ए इन्वेस्टर इन दी सेविंग अकाउंट्स, तो एज ए इन्वेस्टर इन सेविंग अकाउंट्स इंडिविजुअल इन्वेस्टर को फ्लक्चुएशन इन द रेट ऑफ इंटरेस्ट जो है वो इफेक्ट करती हैं। तो वी कैन से कि प्राइसेस जो होती हैं वो फ्लक्चुएट कर जाती हैं जब हमारे पास इस तरह की बात आती है। और हम वी कैन ऑल्सो से डेट आर इज इक्वल टू विच इज रियल रेट ऑफ इंटरेस्ट इज इक्वल टू नॉमिनल रेट ऑफ इंटरेस्ट माइनस इन्फ्लेशन रेट। So we can say that inflation rate is equal to I minus R, and we can say I is equal to R plus pi. So we can define these variables in different manners and in different ways, and we can discuss and analyze the situation prevailing in the market. So when the prices of the securities they are traded in the market, when there occur certain changes in the market, there occur certain fluctuations in the economic situation of the market and the country, so we can say that the prices they are immediately change. तो वो बाज़ दफ़ा इमीडिएटली फ़ौरन चेंज होती हैं और वो फुली चेंज हो जाती हैं, और इमीडिएटली फ़ौरन चेंज होती हैं एंड फुली फॉर सम प्रॉपर टाइम पीरियड. दैट इज़ वी कैन से दैट कि जब वो फ्लक्चुएट होती हैं तो दे डू नॉट कम बैक इमीडिएटली एट देयर प्रीवियस लेवल, बट दे फुली चेंज एंड they keep their new level for some time. They keep their new level of the prices for some time, and credible, and we can say that there is the fluctuation is credible. There is some proper reason and there is some proper logic which is lying behind this fluctuation, which is lying behind this type of change in the prices of assets, which result from the changes in the macroeconomic situation of the country, and reflect all important information about the security, future income and risk related with generating this income. We can say when this happens, we can say कि information जो है वो इस तरह से change होती है कि जो income of the and returns of the assets for the investor, it affect that, and the returns of the assets held by any particular investor is affected for the future time period, and we can say कि it is going to affect when we observe this type of changes जिनको हमने कहा है कि they are the immediate changes, फौरन वो occur होती है, फौरन the prices of the assets and securities they respond to these fluctuations, तो immediately change होते हैं, वो fully change होती हैं, they keep level for some time. And thirdly, हम कहते हैं credible, that there is certain logic and there is certain positive reason behind this. And then we move to the next slide. Again we are keeping up with our discussion about the market efficiency. What is market efficiency and why it is important to have efficient market? Definitely when we have efficiency in the purchase and sale of the assets, when we have efficient prices, so we have efficiency in the overall market. And what the efficiency of overall market indicates, it indicates that we are having much more benefit which are with our decisions in the market portfolio and with our decisions in the trade of the market, and similarly we can say that we have minimum cost, we have minimum risk associated with our decisions about the purchase and about the trade of different assets which we are going to keep our portfolio. So information is important to make us to decide a proper portfolio set. And if we have proper and efficient set of portfolio, so definitely it leads us to have efficient market. From the economic point, what is the important information for the investor? तो investor के लिए जो important information है वो कौन सी है? From economic point of view, the information is defined as information which has direct influence on the investor's decision seeking for defined financial goal. So we can say that investors' decisions are directly influenced by these informations. Economically, if we look at the economics of this information, that what is the importance of this information, so we can say that this information is likely to have direct effect on the decision of the investor, the individual investors and decision makers for particular purchases and particular items to keep in the portfolio, and for those investors who want to have financial goals, and those who have their objective as a policy point, they have made their objective as far as the financial market is concerned, and they want to fulfill their financial objectives and financial goals. So information जो होती है about the fluctuations in macroeconomic variable affect the goal and objective of these individual decision makers immediately. And we have example in this respect. What is example? That essential event in the joint capital stock are published in the newspaper. So one source of information is that the events as far as the joint company stock are concerned, they are published in the newspaper. So newspaper give us important information for the with respect to the fluctuations in the economy, with respect to the fluctuations in the economic point of view and economic behavior of different macroeconomic variables, and consequently the variables which are being traded and securities which are being traded in the financial market. So we can say that newspaper provide an important or basic source for the provision of the information, and they can impact the behavior of, definitely influence the behavior of the individual decision maker. So decision maker or the individual investor, they can undertake their possible decisions in the light of the information and what type of information and what is the source of information is likely to be affected. So market efficiency requires that the adjustment to new information occurs very quickly as the information become known. तो वी कैन से कि जब जो है इंफॉर्मेशन आती है तो इंफॉर्मेशन रिक्वायरमेंट मार्केट एफिशिएंसी बेसिकली रिक्वायर्स दैट द सिचुएशन शुड बी एडजस्टेड अकॉर्डिंगली इमीडिएटली. तो जब भी मार्केट आती है की इंफॉर्मेशन आती है, फॉर एग्जांपल हमारे पास अगर इंफॉर्मेशन आई है कि प्राइस ऑफ सम एसेट ए एंड बी इज लाइकली टू इंक्रीज इन नियर फ्यूचर, तो अगर हमें पता होता है कि अगले टाइम पीरियड में ये बढ़ रही है तो हम क्या करते हैं कि वी बाय ए एंड बी. हम फॉर टाइम पीरियड एक टाइप ऑफ डिसीजन ये है कि वी बाय ए एंड बी, हम ए और बी को बाय कर लेते हैं. सेकंड जो डिसीजन है वो ये है कि वी कीप आर एग्जिस्टिंग लेवल ऑफ ए एंड बी. तो एग्जिस्टिंग ए और बी जो है वो हम अपने साथ रखते हैं, हम उनको सेल नहीं करते फॉर द रीजनेबल टाइम, एंड वी वेट फॉर द रीजनेबल टाइम सो दैट द प्राइसेस जो है वो मे इंक्रीज. तो दिस इज इंपॉर्टेंस ऑफ द मार्केट एफिशिएंसी, दैट मार्केट विल बिहेव एफिशिएंटली, दैट इफ वी हैव द एडवांटेज, इफ वी टेक द एडवांटेज ऑफ द इंफॉर्मेशन अकॉर्डिंगली इमीडिएटली बाय एडजस्टिंग आवर पोर्टफोलियो choices, by adjusting our portfolio holdings. For another source of information is internet. पहला source of information हमने कहा कि अखबार है. अखबार जो है वो important source of information है. Second हमने कहा कि internet जो है वो important source of information है, और it make us to have efficient decision as the decision maker. और इसके ज़रिए information जो होती है वो quickly जाती है, quickly और widely जाती है, दूर दूर तक जाती है और तेज़ी से. Immediately information is disseminated with the help of the internet and up to a greater number of large number of investors, those who are interested in particular type of portfolio. For example, so internet is another important source to disseminate information, to provide this information, and therefore the individual decision maker, they can undertake their decision, they can make their decision accordingly. So what type of information is available, what type of market efficiency exists? There are three forms of market efficiency under efficient market hypothesis. If we have, since we have made the efficient market hypothesis, and with respect to the information available, with respect to the prices of the stocks, with respect to the fluctuation in prices, in relevance to the fluctuation in prices of the other items, so we can say that we have three important efficiency under this hypothesis. The first है वो weak form of efficiency है. What are three forms of market efficiency? First is weak form of efficiency. Second is known as semi-strong form of efficiency. Third is strong form of efficiency. So we can say we have three important types of efficiency of the market. जो पहली टाइप है उसमें वी है वीक इंफॉर्मेशन, और डेफिनेटली जो वीक इंफॉर्मेशन होती है वो वीक एफिशिएंसी को की तरफ जाती है, एंड इट कैन लीड टू वीक एफिशिएंसी ऑफ द मार्केट. एंड सेकंड जो है वो सेमी स्ट्रॉन्ग फॉर्म ऑफ एफिशिएंसी है, और सेमी स्ट्रॉन्ग फॉर्म ऑफ एफिशिएंसी डेफिनेटली इट लीड टू द रियल मार्केट टू सेमी स्ट्रॉन्ग लेवल. This type of information, this type of liability of the market can keep this the third type of the semi-strong market in this respect, and semi-strong market can move in this respect. Third form is strong form of efficiency. कि efficiency जो होती है वो बहुत strong होती है and efficient होती है, market work efficiently in a very strengthened way. So it is the strong or the highly potential type of efficiency of the market that can be discussed here. And under the weak, the first is the weak form of efficiency. Under the weak form of efficiency, stock prices are assumed to reflect any information that may be contained in the past history of the stock prices. So we can say that weak form of efficiency indicate that stock prices are assumed to reflect information that they may contain in the past history of the stock prices, that जो past prices of the stock है, they are likely to reflect the information is known as weak form of efficiency and weak form of prices information. This basically tells us the information about the stock prices in the past. Information about stock prices in past which prevail in the past time period. Right? So if the market is characterized by weak form of market and market form of efficiency, no investor or group of investors should be able to earn abnormal rate of profit over the defined period of time. तो जब वीक फॉर्म ऑफ इंफॉर्मेशन होती है इट लीड्स टू वीक फॉर्म ऑफ एफिशिएंसी. तो वी कैन से इस केस में इन्वेस्टर या कोई एक इन्वेस्टर ग्रुप ऑफ इन्वेस्टर दे शुड बी एबल टू अर्न एबनॉर्मल प्रॉफिट. वो एबनॉर्मल प्रॉफिट जो है वो अर्न नहीं कर सकते. दे कैन नॉट अर्न एबनॉर्मल प्रॉफिट ओवर डिफाइंड पीरियड ऑफ टाइम. तो बाय यूजिंग द इंफॉर्मेशन अबाउट हिस्टोरिकल प्राइसेस available for them by using the technical analysis. So we can say कि in this respect जो historical price है that is also important for determining the behavior of the asset prices in the future, और technical जो analysis है वो भी important है. तो इस केस में हमारे पास दो तरह के important decisions हैं. एक ये है historical decision and trend of the prices. Second is to cope with the historical prices, and to deal with this historical prices we should have the use, and we should use some technical analysis and some technical information. Prices will respond to the news. If this news is random, and price change will not be random. So we can say that how the prices will respond to the news. कि प्राइस अगर न्यूज़ आती है मार्केट में तो उनकी प्राइसेस में क्या चेंज आती है कि फ्लक्चुएशन in the news, how they are going to affect the current prices. अच्छा, जो इकोनॉमी में सोसाइटी में न्यूज़ आती है उनका जो स्टॉक की प्राइस है उनका उन पे क्या इम्पैक्ट है और वो उसको कैसे इफेक्ट करती है. We continue with the discussion. Under the semi-strong form of efficiency or publicly available information is presumed to be reflected in stock prices, and this information includes the information in the stock price the series as well as information in the firm financial reports. And another important type of dissemination of information is through the reports of competing factors. So we can say that the stock prices, series of the stock prices, they are very helpful in determining the prices of the stock, and financial reports, they are helpful to determining the prices of the stock. And the similarly we can say that the reports of the other firms, they are important to determine the prices of the stock. The report of the, then we have report of the competing firms, the firms which are competing with each other. The firms which are for example, as far as the dissemination of the information is concerned, they are competing, they are providing the information which is economic information, and economic information is provided, is known as the information sources, and announced information relating to the state of the economy and any other publicly available information relative to the evaluation of the firm. So these are all different types of the firm that and how they are going to affect the asset prices, and the information available in the firm reports and available in the competing firm reports. So how they are going to affect the overall prices trends of the economy, and any other publicly available information and that relevant to the valuation of the firm. Continuing with the similar topic, that is about the strong form of efficiency. Note that the market with the semi-strong form of efficiency encompass the weak form of hypothesis. Because what is the reason behind the historical market data are part of largest set of publicly available information. So we can say that historical data, it can be also obtained from the data previous observations. पहली बात तो ये from the previous or the past observations available, and the past data available gives us this information. And second ये है कि with the help of the public. So public is likely to help this type of to provide this type of the information. When we, for example, if as an investor we invest in the financial market and we are in large number and we are making purchase and trade, or in other words we can say if we are making the trade in the financial market, so we can come to know that we have the record and experience as an investor about the returns of any particular asset in the field. So if the market is characterized by semi-strong form of efficiency, no investor or any group of investors should be able to earn abnormal rate of return over the defined period of time by using information about historical prices and available fundamental prices and information and fundamental analysis. So we can say no investor or the group of investor or the company, we can say in other words, should be able to earn abnormal profit over the defined period of time by, if we have all these information, even then it is not possible for any investor to undertake the abnormal profit when we are working in a normal production market. So the information about historical prices is important in this respect, and publicly available information, fundamental information or fundamental statement about the financial statement and fundamental analysis is also important in this respect. And we continue with these types of information available. The third important type of information is a strong form of efficiency, which basically represents the relatively stronger form of efficiency, which asserts that the stock prices fully reflect all information, including private sector or inside information. So we can say that stock prices, they reflect the information, they indicate the information with the help of private data and with the help provided by the household sector, as well as the public sector. When we talk about the behavior of the prices of any particular asset or different assets at our places of our interest, for example in the market, when we go to market and we discuss these information, so we have certain important advantage of this. So as well as the information is publicly available. So information is also publicly available in this respect as far as strong form of efficiency is concerned. At public places and from the private sector, from the household sector, we have different dissemination, different sources of disseminating the information. The strong form of market efficiency shows that securities prices, they quickly adjust to reflect both the inside and public information. If the market is characterized by strong form of the efficiency, so this is the characteristics that how the prices adjust and how the investors, they can take their decisions. So we can further say that no one investor or any group of investors, they should be able to earn abnormal profit and abnormal rate of profit over the specified period of time by using the information available in the market with them. The validity of the market efficiency hypothesis, whichever form, is of great importance to the investor because it determines whether anyone can put the market or whether the successful investing is all about luck. So efficient market hypothesis does not require to behave rationally. So we can say that efficient market hypothesis does not require to behave rationally. So what is the reason? The reason is that because in response to the information, there will be sufficient large a random reaction that an investor can assess. Profit change cannot be made. So we can say that because large number of random type of reactions are provided and are emerging as a result of these information, so we can say excess profit cannot be made. The new traders, they can enter the market, and we have a little effect of these little response towards these type of changes. And that is it with the 2 days lecture. And now I will give the summary of the 2 days lecture, that what we discussed in this lecture. And because this lecture is about the management of the portfolio and investment, we discussed the important points about the APT theory, which is the asset pricing theory, or which we discussed that it is impractical. However, the asset concept of the asset prices, what are the asset prices? They are basically returns to the purchase of any asset. And we also discussed that they are related with the macroeconomic variables, and they are also related with different minor factors. And what are minor factors? Which are going to have little effect, which are going to have smaller effect on the returns of the particular securities which we have held in our portfolio. Or in other words, we can say that they have little effect on the efficiency of the market. So what is the market efficiency? We discussed this. Basically, market efficiency indicates the optimizing behavior of the individual and optimizing behavior of the worker. So then we have form of efficiency. जो इसकी forms क्या है? We have different forms of efficiency: weak form efficiency, strong form efficiency, and the semi-strong form efficiency. Basically, these forms of the efficiency, they depend upon the level of the information. For example, if we have information about the history, about the current, and we can predict the future, and also so what type of sources of the information they are available, they can guide us to have the efficient portfolio holding in this respect, or we have less efficient portfolio or any other portfolio as a part of our portfolio set and holding as a part of our investment. Or that was with the 2 days lecture. We also did in the comparison between the APT and the CAMP model, and we come to know that this discussion was very much important as far as the different real situation is concerned. For example, CAM model take into account and consideration the behavior of the market portfolio with respect to portfolio of individual, and the APT theory reflect the behavior of macroeconomic variable and fluctuations of macroeconomic variable as far as the expected rate of return are concerned. And we said that the efficiency basically indicates the sensitivity of the fluctuations in different atoms and different assets towards the fluctuation in the returns of any particular asset. Then we provided market efficiency theory. So out of market efficiency theory, we had that the market efficiency is basically based on the true information and complete and full information, on the credible information. If we have credible, complete and full information with respect to the situation prevailing in the market, with respect to the behavior of the assets, and that was done in the past. This was the end with the 2 days lecture, and we will continue the discussion in the next class. And I hope you will be able to understand your concepts and make your concepts clear with the help of today's lecture and in the light of these slides and the information provided in these slides. That's it. Allah Hafiz.